For many years, South Korea has often been viewed as a symbol of miraculous development. From an impoverished post-war nation, the country has risen to become a leading Asian economy with global tech conglomerates, a high-quality education system, and a developed standard of living. However, behind that glamorous image lies a less noticed reality. A significant portion of young people are accepting massive debt to invest, speculate, or simply maintain their livelihoods. Many enter the stock market with borrowed money, buy cryptocurrencies using credit, use leverage to invest in real estate, or take out consumer loans to keep up with their peers' living standards. This phenomenon has been described by the South Korean press using the phrase Yeong Kkeul, meaning scraping together every last penny, reflecting the trend of mobilizing all resources, including borrowed capital, to invest in the hope of turning one's life around. This is not a story that can be explained by a single cause such as greed or a lack of financial literacy. If only looking in that direction, one would overlook the structural pressures that the younger generation of South Korea is facing. Their decision to take on debt is often the result of a combination of skyrocketing housing prices, a fiercely competitive labor market, an increasingly slow pace of wealth accumulation, the impact of social media, a persistently low interest rate environment in the past, and the fear of being left behind. It is exactly the intersection of economic, social, and psychological factors that has made gambling one's future with borrowed money a notable phenomenon. To understand why this happens, it is necessary to look at South Korea's development context over the past 2 decades. Following a prolonged period of rapid growth, the economy began to face many new challenges. The growth rate has slowed down, the population is aging, the birth rate is among the lowest in the world, and labor productivity is no longer rising as strongly as before. Meanwhile, asset prices, particularly real estate in Seoul and its surrounding areas, have increased much faster than the incomes of young workers. According to data from various reports by the Central Bank of South Korea, Bank of Korea, the OECD, and national statistical agencies, South Korea's household debt ratio has consecutively been among the highest in developed economies for many years when calculated as a percentage of GDP. This shows that taking on debt is no longer an isolated phenomenon, but has become a noteworthy characteristic of the economy. The first and perhaps most important cause lies in the change in the wealth accumulation capacity of young people. In previous decades, a person with a stable job could completely expect that if they saved diligently for many years, then they would be able to buy a house. This model used to work quite effectively during the period of rapid growth. However, for many young South Koreans today, that formula is no longer true. Incomes have risen much slower compared to the growth rate of real estate prices. An apartment in Seoul can cost dozens of times the annual income of a young worker. This causes the gap between saving capacity and asset value to grow increasingly larger. When the traditional path of accumulation becomes too long, many people begin looking for a shorter route. They do not necessarily believe that investing always brings high returns, but they feel that if they only rely on savings, then they will almost certainly never catch up with asset prices. This is a very important distinction. In many cases, the decision to borrow money for investment does not stem from absolute confidence, but from the feeling that there are no other viable options left. When young people see housing prices rising faster than their saving rate year after year, they tend to accept greater risks in the hope of shortening the gap. Real estate plays a special role in this story. South Korea has a very high level of population concentration in the Seoul metropolitan area, where many jobs, universities, large corporations, and career development opportunities are centered. Because of this, the demand for housing is always high while the supply is difficult to expand quickly. The prolonged increase in housing prices has created the expectation that real estate will continue to appreciate in the future. That expectation makes many people willing to borrow at high ratios to buy a house as soon as possible. They fear that if they wait a few more years to save, then housing prices will rise faster than the amount of money they have put away. From an economic perspective, this is a phenomenon of self-fulfilling expectations. When many people simultaneously believe that prices will continue to rise, they aggressively buy in. The increased demand then contributes to making prices actually rise, thereby further strengthening the initial belief. In such an environment, Those standing outside the market often feel that they are the ones suffering the most. This mentality does not only appear in real estate, but also spreads to stocks and cryptocurrencies. Another factor contributing to accelerating the borrowing trend is the prolonged period of low interest rates following the 2008 global financial crisis, and particularly during the COVID-19 pandemic. When borrowing costs decrease, utilizing financial leverage becomes more attractive. Many people argue that if investment returns are higher than borrowing interest rates, then taking on debt is reasonable. In theory, this argument is not wrong. However, it is only true when asset prices continue to rise and incomes are sufficient to repay the debt. If the market reverses or interest rates rise, risks will emerge very quickly. Reality has proven this. When many central banks around the world raised interest rates to control inflation from 2022 onwards, the debt repayment costs of South Korean households also increased accordingly. Loans that once seemed safe started to become a burden. Real estate prices in certain areas adjusted, the cryptocurrency market fluctuated wildly, stocks no longer rose continuously like before. Quite a few young people fell into a situation where they both had to pay higher borrowing interest and witnessed their asset values decline. However, economics is not the only explanation. South Korea's social environment also creates immense pressure on young people. This is a nation famous for its high level of competition in education and employment. From university entrance exams to recruitment at large conglomerates, young people must invest a lot of time and effort to secure a stable position. After overcoming those competitions, they face another reality. Income from working is no longer sufficient to quickly build wealth like their parents' generation. This alters the perspective on labor. In the past, working hard was often seen as the primary path to improving one's life. Today, many young people realize that financial assets or real estate appreciate faster than income from labor. If an apartment increases in price in 1 year more than the amount they can save after many years of working, the belief in the value of labor is easily shaken. At that point, debt-fueled investing starts being perceived as a way to shorten the gap between income and asset prices. Social media contributes to amplifying this phenomenon. On online platforms, stories about people earning massive profits from stocks, cryptocurrencies, or real estate often attract more attention than cases of failure. This is a fairly common form of information bias. Viewers can easily get the impression that investment success appears everywhere, while losses are shared less frequently. When constantly exposed to images of quick wealth, many people begin to believe that staying on the sidelines is actually the riskiest decision. The concept of FOMO, the fear of missing out, therefore becomes a highly notable psychological factor. FOMO not only drives people to buy assets at high prices, but also accelerates the use of financial leverage. A person might think that if they only use their savings, then the profits will not be large enough. Wanting to keep up with the market, they need to borrow more to increase their investment scale. This is when financial risks start accumulating. A phenomenon that once drew much attention in South Korea was the cryptocurrency investment boom among the 20 and 30-somethings. According to multiple surveys and statistics during the strong bull market phase, young people accounted for a significant proportion among retail investors. A segment utilizes borrowed capital or consumer credit lines to invest with expectations of exceedingly high returns. When the market goes up, this strategy can generate quick profits. But when prices fall sharply, the losses are also magnified because the debt repayment obligations remain unchanged. What is worth noting is that many young people clearly understand the risks, yet still choose to participate. This shows that they are not always lacking in financial literacy. In many cases, they are making decisions based on the assessment that the risk of not investing is even greater than the risk of investing. This is a point that needs to be analyzed carefully. If a person believes that no matter how hard they work it will be difficult to buy a house or accumulate enough wealth, they might accept decisions that in other circumstances would be deemed too risky. In addition, South Korea's achievement-oriented culture also creates invisible pressures. Success is often measured through various tangible criteria such as jobs, housing, assets, and living standards. When the wealth gap becomes easier to observe thanks to social media, interpersonal comparisons also increase. A person does not only evaluate themselves based on absolute income, but also based on their relative position compared to their peers. If they constantly feel like they are falling behind, they easily make financial decisions that resemble gambling. Even so, it would be unfair to attribute the entire blame to the social environment. The decision to take on debt is still a personal choice and always comes with personal responsibility. Not all young South Koreans utilize excessive financial leverage. A great number of people still choose saving, cautious investing, or avoiding debt. Therefore, this phenomenon needs to be understood as a prominent trend among a segment of the youth, rather than a characteristic of an entire generation. Another perspective suggests that the use of financial leverage is not always negative. In business and investing, borrowing capital is a common tool to expand profit-making opportunities. Businesses borrowing money to invest in factories, individuals taking loans to buy houses or attend university are all decisions that can bring long-term benefits. The issue does not lie in whether to borrow or not, but rather in the purpose of using the capital, the repayment ability, and the level of risk tolerance. If the loan is utilized for assets with stable cash flows or to enhance income-generating capacity, the risks can be better controlled. Conversely, if borrowing to speculate on highly volatile assets with short-term profit expectations, the danger of financial imbalance will be much higher. The South Korean government in recent years has implemented various measures to control household debt and limit speculation. Regulations on loan-to-value ratios, repayment capabilities, home loan conditions, and credit monitoring are adjusted periodically. Simultaneously, regulatory agencies have also repeatedly warned about the risks of using borrowed funds to invest in stocks and cryptocurrencies. However, the effectiveness of these policies is not always as desired. When the root causes are high housing prices, massive wealth inequality, and prolonged price increase expectations, credit tightening measures can only solve a part of the problem. Alongside credit policies, the labor market also needs to be considered. Young people will have less motivation to gamble their futures if they believe that working hard can bring a stable life within a reasonable time frame. On the contrary, if the gap between income and asset prices continues to widen, the pressure to seek profits from investing will persist. This indicates that the problem does not merely lie within the financial system, but is also related to labor productivity, housing policies, regional development, wages, and career opportunities. Financial education is also an important link. Knowledge about compound interest, financial leverage, risk management, and asset allocation can help young people make more balanced decisions. However, it is also necessary to acknowledge that financial education is not a comprehensive solution. A person who clearly understands the risks might still accept gambling if they believe that other options are even less viable. Therefore, enhancing knowledge needs to go hand in hand with improving economic conditions and expanding wealth accumulation opportunities. This phenomenon also reflects a change in the perception of time. Previous generations often accepted accumulating wealth over several decades to achieve stability. Meanwhile, many young people today have to face a fast-changing market, asset prices that fluctuate monthly, and a massive amount of information in the digital environment. That pace makes expectations for success become more short-term as well. When everything seems to change very quickly, waiting decades to accumulate wealth becomes harder to accept for a segment of young people. From a broader perspective, South Korea's story is not entirely isolated. Many other developed economies also record a similar trend when asset prices rise faster than incomes, especially in large cities. Young people in multiple countries all have to face the same question. Is relying solely on a salary enough to achieve goals once considered normal, such as buying a house? Because of this, the South Korean case does not merely reflect a single nation's issue, but also reveals profound changes in the global economic structure. Even so, South Korea still has its own characteristics that make the pressure more pronounced. A high population density in the capital region, fierce competition in education and employment, an achievement-oriented culture, along with a real estate market playing a special role in wealth accumulation, have created an environment wherein the decision to take on debt for investment is more prone to emerge. Looking at the entire picture, It can be seen that a segment of young South Koreans being willing to gamble their futures with borrowed money is not purely an expression of recklessness. It is the result of many issues acting simultaneously. Asset prices rising faster than incomes, traditional accumulation opportunities declining, expectations of getting rich through investing, the influence of social media, a once favorable credit environment, and prolonged competitive pressures. Each individual factor might not be enough to create a trend, but when combined together, they create a feeling that standing still means falling behind. However, this phenomenon is also a reminder about the limits of financial leverage. Borrowed capital can magnify profits when the market is favorable, but also magnify losses when conditions change. A financial decision is only truly sustainable when built upon repayment capabilities, an understanding of risks and reasonable expectations instead of the belief that asset prices will always rise. On the policy front, controlling household debt needs to go alongside improving access to housing, expanding quality employment opportunities, boosting productivity, and strengthening financial education. On a personal level, clearly understanding one's own limits and fully evaluating adverse scenarios remain the most important foundation to protect the future. Ultimately, the story of young South Koreans poses a meaningful question that extends beyond the borders of a single nation. When the path of wealth accumulation through labor becomes increasingly difficult, what does society need to do so that young people do not have to view gambling with borrowed money as their only chance to pursue a stable life? Answering that question not only helps reduce financial risks for a generation, but also contributes to building a more sustainable development environment, where success does not depend too heavily on accepting ever-growing gambles with one's own future.